Funding for Market Journal is provided by the Nebraska Corn Board.
This is Jane. She thinks she's just filling her car, but she's also filling the air with cancer-causing toxic chemicals used to boost octane in gas. What doesn't burn in the engine enters the air and your lungs, even your heart and brain. Bad for everyone, especially kids. Ethanol is a natural octane booster, clean burning and non-toxic. More ethanol means less scary stuff in our gas and in the air we breathe. And that makes your choice pretty plain, Jane. American Ethanol, cleaner air for Nebraska.
Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board.
Welcome to this week's edition of Market Journal. I'm Jeff Wilkerson. On this episode, Mike Briggs describes profit margins in the feedlot. Daren Redfearn talks about grazing cover crops. Dave Aiken outlines the EPA's policy on livestock emissions reporting. And Charles Shapiro gives an overview of long-running soil management research. Mike Briggs is our market analyst this week. Earlier this month, futures prices for nearby live and feeder cattle contracts set new highs. December 2017 live cattle and January 2018 feeder cattle each peaked on November 3rd. But both ran into the wind Monday, responding negatively to another bearish supply report. The U.S. Department of Agriculture's latest cattle on feed report showed a 6% increase in the country's feedlot inventory compared to a year ago. And for the 9th time in 10 months, placements were higher than they were in 2016. We talked with Mike Tuesday morning and began by asking for his thoughts on November's report.
Well, it's kind of what we've expected. It's kind of been a trend. We've been a little short on the guesses on the placements because we've been every single last 3 reports. I think we've been over on replacements, so it wasn't a big shock to see that again, that it was over the guesses. At least this time it wasn't over so big, so it didn't shock the market quite so bad. Marketings were still good as I anticipated. You know, as you keep having those placements, your cattle on feed, the on-feed number is going to get bigger, and that's just the way it is. So we're going to have plentiful supplies going forward.
Right, to follow up on that, the last 2 months placements were up double digits. So when does that start to impact supply?
Well, that's going to be after the first of the year. Well, not right after the first year, but as you go into spring, I think it's going to be pretty hard on us. May, June, kind of like it always is. I think you're going to see big supplies of cattle going forward. So I think producers are going to have to be real cognizant of their margin management, their risk management. Having said that, so long as nothing derails demand, we can just keep chewing through this just like we've been chewing through it. I don't know what could derail demand at this point in time, probably some wonderful outside influence, but I think things are going along pretty well. But the producer has to be really cognizant of the fact we're not in a short supply situation. We're now in a big supply situation. You got to go forth accordingly.
It's been an interesting month for market prices. We hit a high earlier this month, and now we completely fell off. Describe what happened.
Well, I think a lot of that's fund activity. The funds always push it too far in either direction. They rocketed this thing higher, and it was a little hard to figure out, although you've seen really excellent export demand. And demand in general has been really good, so you can kind of understand it, but then when it hit, the way it peaked and dropped here and basically took back the whole rally, that's really shocking because not that much has changed, but that's what happens when the funds are in that market. They push it all over the place. Now, having said that, I don't think that much has changed. I think your fundamentals are secure enough here that hopefully, now yesterday the market went down, and if you looked at a bunch of charts, we hit a bunch of moving averages in every single month and on the long-term charts. So now today we've had a little bit of a recovery. If cash can be steady, that really makes this market kind of hold in and we can see it gain back something. You know, how far it can go, maybe you can go back to the old highs. It's going to be really demand dependent. We ran into, the cutout kind of ran into a brick wall here last week, and that gave the market a little impetus to go down too. And it kind of felt like that peaked a little early because usually we have really good demand going into maybe the middle of December, maybe even a little longer than that, and it kind of hit a brick wall, so that was a little bit concerning. But as I was reminded yesterday, packers don't always have to make money. And we've seen long stretches where they didn't, and they've been making money with both hands. So maybe it's time that we can leverage a little bit away from them, and the retailer leverages a little bit away from them. They won't like that, but maybe that's what's actually going to happen here.
What has their demand been like, the packer?
Packer demand has been excellent because they've been making so much money. When they're making in excess of $100 a head, they're gonna harvest cattle, and they've continued to do that. The other thing that's been good is because demand has been good, they've got stuff sold out front, so therefore they have to buy cattle to fill those out front orders. So from those standpoints, that's really good for us as we go forward. Now, a lot of the analysts are trying to talk about how, we're going to have a big supply drop after the first of the year. Well, the market's kind of taking care of that, because if you look at that spread between December and February, that's going to pull cattle out of December into February. Pulled a bunch of mine. I've already contracted them for January because that was such a huge spread. It was just a gift. So that's going to smooth out some of that alleged drop in supply. But because that's there, I just think demand is good enough and things could keep rolling here. I think this break was way overdone, is what I'm saying.
Finally, a look at feedlot margins.
They were really good in October and first part of November. They've kind of taken all that away. I think, but if we can sell cattle 118, 124, everybody's going to be fine. And I don't think there was any break-evens where people were buying 127, 128 break-evens. I know there's a lot of break-evens in the 120s, so, maybe those cattle don't make very much money, but as long as you're not getting your nose bloodied, you're all right.
Next week, Iowa State Extension economist Chad Hart will join us to look at corn and soybean markets. The latest progress report from Nebraska's National Agricultural Statistics Service indicates the state's farmers wrapped up soybean harvest over the last week and are also 93% complete with the 2017 corn harvest. In some of that ground, growers choose to plant cover crops during the fall for livestock grazing later. But Nebraska Extension's Daren Redfearn says many cover crops were put in later than usual this year.
So actually what we're seeing this fall with some cover crops, some issues with growth, mainly some slow growth. However, I think if we move back to the summertime, we actually have seen some reduction in some forage production from some of the cover crops following winter wheat and also following some of the corn silage. That may or may not be a problem, but normally we have pretty good success with that standpoint. I think that's just due to some of the normal environmental changes we're seeing, higher temperatures, no moisture, a lot of those things that we normally will blame lack of forage production on. Some of the issues that we're seeing this fall, don't think we really have a good feel for what's going to occur yet, although the issues that we're seeing are related to some of the delayed planting. You remember back during harvest season, we had that long wet spell, which delayed harvest, which delayed some of the planting of cover crops that we would see after both the corn and the soybean. I was out actually today looking, and some of the earlier planted cover crops would be around it'll be October 20th, just now beginning to emerge a little bit. So that planting date is going to be pretty critical. We're not going to see a lot of growth going into the main part of the winter.
And what is the implication of that?
Well, we're still looking, doing a lot of research on cover crops, but one of the things that we think we've got a good handle on is this planting date effect. Typically, the later cover crops are planted into the fall, the reduced the production is going to be during the fall. But one of the other things that I think is more important for some of the things that we're looking at is that reduced production carries over into the spring as well.
Does it matter what type of cover crop the producer has planted to graze?
Most of this is going to be related to the small grains, the cereal rye, winter wheat, winter barley, winter triticale, those. And I think winter wheat is probably where we have the most data. But we have also seen this occur on a regular basis with the cereal rye. The winter barley and winter triticale we're a little less convinced about, but I do think we will see some reduced production from all of those winter cereals.
So is there a type of preparation that producers can be doing if they know that they wanted to try and graze this in the spring?
Well, I think some of that delayed planting, it was pretty dry. There is some moisture down beneath that. So I think if we can get these up and emerged, we'll eventually be in pretty good shape from a production standpoint. Producers are going to need to evaluate these stands pretty closely. Also this fall, just to see what they think the stand percent is and production potential. As we move into the spring, one of the things that occurs is that the cereal rye, it's the earliest maturing one that we have, and some of our data says that March 21st is when it begins stem elongation. It potentially will have a seed head out 3 weeks later. So once it begins to go reproductive, it's very quick in that standpoint. So it's not really going to add a lot of production. Grazing some of those pastures early might be an option. Certainly grazing, what I might call strategic grazing. Some of those fields that have had some early emergence on them will have some greater production that occurs as well.
You said you were still learning about cover crops, and especially when it comes to grazing. Is there more interest from producers to use it as a grazing tool?
I think we are starting to see some increased interest, especially as we move over into the eastern part of Nebraska. Some of our producers in the western part of the state will likely tell you that they've been grazing cover crops and never quit.
The UNL Beef website features several resources on grazing cover crops. Those can be found under the Cattle Production tab and include articles with more information. Certain concentrated animal feeding operations, or CAFOs, currently report livestock emissions to the Environmental Protection Agency. Under legislation known as the Federal Superfund Law and the Emergency Planning and Community Right to Know Act, the agency's annual reporting rules require larger producers to estimate the amount of materials like ammonia and hydrogen sulfide their operations release. However, earlier this year, a federal court of appeals ruling paved the way for those requirements to also apply to smaller-sized operations starting November 15th. Before that date, the EPA had asked the court to postpone implementation. That didn't happen. Nebraska Extension's Dave Aiken says after producers began reporting on the 15th, he assumes the overload pushed either the court or the EPA to move the deadline to a later date. As of the time of this taping, we don't know when that is. Dave joined us recently to give more background on this issue.
Under both the Superfund law and the Community Right to Know law, if you release over a certain amount of different types of hazardous materials, you have to report nationally and locally. Nationally, so that EPA can become involved if there's going to be any kind of environmental cleanup, and locally in terms of local emergency response officials if they need to respond to take care of a dangerous situation.
How does agriculture fit into that, or how has agriculture fit into that?
Well, ag has been exempted, not legislatively, but EPA did it administratively. And large concentrated animal feeding operations, 1,000 beef cattle or more, 700 dairy, 2,500 feeder pigs, they have had to report initially and then annually in terms, not as opposed to having to report every day.
So why are we talking about it now?
Well, in April, there was a ruling in the Federal District Court in the District of Columbia, Federal Court of Appeals, that said that the ag exemption that EPA had written back in 2008 was not justified by the legislation, and that EPA didn't do a good enough job of saying that, hey, this is just nickel and dime stuff. We don't want to, we don't want to mess with this. The court threw that out, and the EPA said, well, give us some time so that we can, be ready, because we're going to have tens of thousands of livestock producers reporting, and we don't know if we're ready to handle that. And so the judge, so the court said okay, and they gave them extensions, but the last extension ran out November 15th.
This was for smaller CAFOs.
Smaller than the 1,000 beef cattle or 2,500 feeder pigs.
And the thought was then on November 15th, they would have to report. So November 15th came, what happened?
Well, EPA was trying to get the judge to extend it into January. He said, we made some progress, but we're still really not ready for this. Did not get the exemption. So on the 15th, all these calls started coming in, and the National Response Center, which gets these calls, I'm guessing here, but went to EPA and said, look, these guys are, tying us up for these cow calls, and we don't want these cow calls, So they said, okay, well, we'll set up a email option. So they say, don't call, but just email this address, and that'll start it. I'll bet they crashed the email server, and they finally said, okay, we're pulling the plug on this because, we have real emergencies to worry about. And if we're tied up with this livestock stuff, emergencies could go unresponded to. And so they finally pulled the plug, and we don't know if the judge was involved in this or if they just did it. They said, we've got to protect the people of the United States, so we're going to put this aside for now.
Which leaves us where?
Who knows? Right now on the EPA website, it says you do not have to submit information anymore, and we don't know when the new submission date will be, but and they said, so stay tuned is what they say. My guess is that now the court has probably been persuaded that this was not a good idea, and so that EPA needs to come up with something that will not compromise the environmental response mechanism that we have in place to deal with serious environmental issues and responses and cleanups and all that kind of stuff.
Give me the background on what those smaller CAFOs would have to report and how they would determine the numbers.
Well, one of the big things that has been so confusing is that there are no good numbers. And my hope is that if EPA has the time, they'll say, okay, if you're 300, 400, whatever the number is, beef cattle, then you have to report. I mean, that's, it would be in their interest to have numbers for the different livestock species and production systems and stuff, so that you don't get a bunch of calls from people that don't need to report. So hopefully there'll be some clarity on that. EPA has said that they're trying to work on a simplified reporting form so that it'll be very easy to report. And I'm again speculating, but I'm guessing that they will have another number to call rather than the National Response Center, which is the true emergency line. They'll come up with another one, say you can call this one, or better yet, send us the email, and we'll give you the number and send you the forms, and then you have 30 days to submit the forms, and then every 12 months after that. Now, EPA has also said they would like Congress to become involved and to clarify that whether this is, EPA said, we don't want to mess with this, so if Congress says you don't have to mess with it, then we'll be happy. But, Congress is pretty busy, and, getting something out of Congress is a lot harder than pulling teeth, so we'll see.
You can find more background on this issue in Dave's recent Cornhusker Economics article. Additionally, you can find more resources on reporting guidelines through a link on the Market Journal website. The November Nebraska Farmer explains how succession planning can present problems for farmers and ranchers. In this month's issue, Nebraska Extension's Alan Vanalik says parents often make two big mistakes in planning. They assume their kids will get along during the changeover, and they assume their children will want to keep the operation in the family. You can read some of Vanalik's tips for farm transitioning in the November Nebraska Farmer. At the end of this year, Nebraska Extension soil scientist Charles Shapiro will retire after more than 30 years with the University of Nebraska-Lincoln. Charles is based at the Haskell Ag Lab in northeast Nebraska, where he and a team of researchers have studies on tillage, crop rotation, and nitrogen applications that have been ongoing for over 3 decades. If you've watched our previous interviews with Charles, you've no doubt heard him urge growers to do one thing when thinking about nutrient management strategies: take a soil test. We recently talked with Charles to ask for his final recommendations generated from years of research results.
When we make a fertilizer recommendation, we base it off generally what the productivity is as reported by the grower. And so for nitrogen, if they think they're going to get 300 bushel yield, we'll fertilize for that. But if the field and the farm is not that productive, fertilizing for 300 bushels isn't going to produce 300 bushels. So over my career, this conflict between what you want to get and what you think you can get if you put on all the various inputs compared to what you have been getting over the years causes two different kind of fertilizer recommendations. And if you fertilize for the actual yield, it's usually a less cost program. The problem is that human nature is, I don't want to leave 20 bushels in the field or 3 bushels that I could have gotten if I put this extra on. But the conditions are not always such that you're going to get that extra yield, and so it's a balancing act.
Specifically around that topic, you wrote recently for CropWatch about nitrogen management in soybeans, and you've done work on nitrogen for a number of years. Tell me about what you saw from years past and how it relates to the results you get from today's research.
The recommendation actually hasn't changed all that much. We know that soybeans, when they don't have the symbiotic fixation bacteria, use a lot of nitrogen, because a bushel of soybeans has about 3.5 pounds of nitrogen in it. The issue is if we can increase yields by putting nitrogen out. And the traditional thinking has been that if you have poor conditions, a little nitrogen could help. The other idea is at very high yield levels, the soil doesn't produce enough nitrogen, the bacteria doesn't produce enough nitrogen, so you need to add nitrogen. But what we continue to find, and the reason I wrote that article, was that current research is showing that you can improve your yield of soybeans, but it's at a very high cost in terms of hundreds of pounds of nitrogen. It's generally not economic. So I think it's established that soybeans in the future will probably need nitrogen. It goes back to that aspirational and actual. How much nitrogen does it need to add 2 or 3 bushels of soybeans? And usually it's in the hundreds of pounds.
One of the awards you received, of many, I'm sure, was around UNL's soil test procedures. Explain how UNL determines their soil nutrient recommendations.
Going back a long way into the 60s, they've taken the approach of finding out at what soil test level the plant will stop responding. So that means going to many fields and testing the soil, figuring out what that number is, and then putting out experiments. And when you don't get a difference between where you apply and you don't apply, you say that's the critical level. And so for phosphorus, potassium, zinc, that's the procedure we've used.
What is the simple message to sum up more than 30 years of service for the farmer? What's the easy, implementable practice they can do on their operations when it comes to soil?
Look at soil as part of the whole system, and if you are trying to improve your whole production, then you have to look at the other components as well as soil. Right now there's a lot of emphasis on cover crops and improving physical and biological properties. That'll be important, but you still need to use soil testing to determine when you need to add nutrients.
Now, with this week's weather forecast, here's Nebraska Extension ag climatologist Al Dutcher.
Well, folks, normally we would do our regular forecast, but with the university shut down, we thought this would be the perfect opportunity to give you an update on the winter forecast, particularly since we are dealing with a La Niña event. And a lot of it boils down to what is going on in the equatorial Pacific, and we look at that in terms of differentials in sea surface temperatures compared to normal. And I'll show you the one thing that definitely shows us that we are in a La Niña is that we're seeing some pretty extensive area along the equatorial Pacific with below normal sea surface temperatures. More importantly, as you look to the north, you'll notice this little bubble of above normal sea surface temperatures. This is very important because the process of La Niña also shows us that we see a high pressure system developing in a mean position in the Gulf of Alaska. Some of the energy coming out of the western Pacific will actually undercut this high pressure system, so that pocket of warm water actually will energize some of the storms that slip underneath this high pressure system and crashing into the western United States, gives them that upsurge of moisture. More importantly for us, a determination of how cold our winter will really be determined by the position of the front of this ridge and in conjunction of whether when you see the Arctic Oscillation favorable for the penetration of cold air into our region. Current models actually indicate that we're probably going to be looking at a fairly cool winter period, particularly the northern plains and over the Great Lakes. For us here in Nebraska, of course, it will be a matter of how much of this cold air slides down the front ranges of the Rocky Mountains and how much snow cover do we put on the surface around the upper plains and Canada, which would reinforce these shots of cold air coming out of the Arctic region of North America. So as we look at the forecast for the winter period, December, January, February, this is the official forecast put out, colder than normal conditions across the northern plains, budding right up to Nebraska. In terms of precipitation, above normal to the Central Rockies and Northern Rockies and the Great Lakes, with eastern Nebraska kind of caught in between the area below normal and above normal precipitation. As we take this one step further, now we're looking at the January, February, March period. You can see the surge Arctic air looks like that mean position will favor right over the northern upper Midwest, pushing into portions of eastern Nebraska, very warm conditions to our southwest and southern plains. More importantly, when you look at precipitation, we start to see an expanding area of dry conditions. This would not be favorable for the wheat crop, but more importantly, we still see a continuation of above normal moisture from the northern Rockies into the north central Rockies and up through the Great Lakes region. This would be very beneficial for alleviating some of the drought concerns up in the northern plains, but if the ground is exceptionally frozen and deep, most of this will become more of a runoff component. Now as we go into the late winter, which is basically the February, March, April period, we can start to see the relaxation of this cold air, but it does pivot right down to the Nebraska border, and we see the above normal temperatures being forecasted to rise up to the southwestern portion of Nebraska. So this confirmation of these two competing air masses is likely going to favor some significant severe weather outbreaks if we have an active weather pattern as we move into the spring period. More importantly, we start to see a relaxation of the precipitation back to the Great Lakes and an expanding area of above or below normal precipitation. So we'll watch real closely with the Central Rockies snowpack, because if it's below normal in May, it's also favorable for expanding drought in the Central Plains.
Thanks, Al. Today's interviews are available individually on the Market Journal website and through the Market Journal mobile app. They include information on cattle prices, grazing cover crops, livestock emission reporting requirements, and soil management. As always, you can keep up with Market Journal during the week by following us on Instagram, Facebook, and Twitter. Next week, Chad Hart will analyze corn and soybean markets, and Jessica Spreitzer from the U.S. Meat Export Federation will discuss American pork and beef exports. Until then, thanks for watching. I'm Jeff Wilkerson. We'll see you next week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board. Market Journal is produced by the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources.